Bitcoin is stuck, but the reason may not be only inside the Bitcoin chart. The bigger story is that the market is being forced to choose where the next dollar should go. And right now, that choice is not clearly favoring Bitcoin. It is favoring artificial intelligence, chips, data centers, mega-cap technology, and the next wave of companies that investors believe could define the future of growth. This does not mean Bitcoin is dead. It does not mean AI will win forever. But it does mean Bitcoin is no longer trading in an empty room. It is competing for the same liquidity, the same institutional attention, and the same risk capital that is now being pulled toward the AI trade. That is the real pressure. Bitcoin is not only fighting sellers, it is fighting a stronger competing story. For years, Bitcoin had one of the most powerful narratives in global markets. It was digital scarcity. It was an inflation hedge. It was a hedge against currency debasement. Then it became the institutional ETF story. But markets do not reward old stories forever. They reward the story that has the strongest momentum now. And in this moment, the market's imagination is not being dominated by Bitcoin. It is being dominated by AI. The AI trade has become more than a technology trend. It has become a liquidity magnet. Investors are not only looking at chatbots or software, they are looking at chips, cloud infrastructure, energy demand, data centers, enterprise adoption, productivity growth, and massive capital spending. That is why AI has become such a strong competitor for Bitcoin. Bitcoin does not only compete with Ethereum, Solana, or other crypto assets. At the institutional level, Bitcoin competes with every major asset that can tell a stronger story. This is where the market has changed. In a classic crypto bull market, capital rotates inside crypto. Bitcoin leads first, then Ethereum follows, then altcoins move, and speculation spreads across the ecosystem. But this rotation looks different. Capital may not be simply moving from Bitcoin to other crypto assets. It may be moving away from crypto attention altogether and toward AI, semiconductor stocks, mega-cap technology, and future IPO narratives. That matters because when money stays inside crypto, the market still has internal energy. But when attention leaves crypto and moves into another major asset class, Bitcoin loses both liquidity and urgency. Urgency is important. In modern markets, attention behaves like liquidity. When investors are watching Bitcoin, talking about Bitcoin, buying ETF exposure, and waiting for a breakout, price can build momentum. But when investors believe Bitcoin can wait, the market becomes heavy. Bitcoin becomes something people still respect, but not something they feel forced to buy today. That is one of the main reasons it feels stuck. The market is asking a simple question. Why should the marginal dollar go into Bitcoin now? Not next year, not in theory, not because of the long-term thesis, but right now. And that is a harder question than it looks. Bitcoin can still have a strong long-term case while its short-term attention is weak. A great asset can still go through periods where capital does not want it. A powerful narrative can still lose momentum, and a market can still believe in Bitcoin's future while deciding that AI currently offers the stronger near-term story. This is also why ETF flows matter, but they should not be viewed in isolation. When spot Bitcoin ETFs attract strong inflows, they show that institutional demand is supporting the market. When those flows weaken or turn negative, the market starts to question whether institutional patience is thinning. But the bigger point is not just that some money is leaving Bitcoin. The bigger point is where the market wants that money to go next. If the answer is AI, then Bitcoin's problem is not only selling pressure, it is competition for capital. That competition becomes even more serious when macro liquidity is not easy. If interest rates stay higher, if bond yields remain firm, or if investors feel less confident about future rate cuts, the market becomes more selective. In an easy liquidity environment, many assets can rise together. Bitcoin can rise, AI can rise, stocks can rise, and crypto can rise. But when liquidity becomes selective, the market starts ranking stories. It asks which asset has the strongest momentum, which asset has the clearest growth narrative, which asset has the strongest flows, and which asset deserves capital first. Right now, AI is ranking very high in that competition. It has corporate earnings, capital expenditure, hardware demand, software adoption, and the feeling that a new economic cycle may be forming around it. Bitcoin has scarcity, monetary theory, ETF access, and long-term institutional adoption. Both stories can be powerful, but in the short term, the market may prefer the story that feels more connected to visible growth. That does not make Bitcoin weak forever. It simply explains why Bitcoin can remain under pressure while the AI narrative continues to absorb attention. This creates a psychological problem for Bitcoin holders. Markets do not only move on data, they move on comparison. If Bitcoin is not moving while AI-related assets are capturing headlines, investors feel opportunity cost. They begin to ask why they should keep waiting. Some traders move to where momentum looks stronger. Some institutions reduce exposure. Some retail holders become impatient. Over time, this can make Bitcoin feel even heavier, not because the long-term thesis has disappeared, but because the market's patience has become thinner. That is why the key question is not whether Bitcoin believers still believe. Believers can believe for years. The key question is whether the broader market wants to allocate the next dollar to Bitcoin today. That next dollar is what creates momentum. It is what turns a sideways market into a breakout. And if that dollar is being pulled toward AI instead, Bitcoin can stay trapped even while its long-term argument remains intact. So what would change the picture? Bitcoin does not need a miracle. It needs evidence that capital is willing to return. First, ETF selling pressure needs to calm down. The market does not need record inflows every day, but it does need to see that institutional demand is not disappearing. Second, liquidity conditions need to become less restrictive. If yields cool and investors become more comfortable taking risk again, Bitcoin could regain macro support. Third, the AI trade may need to slow down or become overcrowded. If investors start questioning whether AI has moved too far, too fast, capital may begin looking for another major story. Bitcoin could benefit from that, but only if its market structure still looks strong enough to attract buyers. This is why the calm view is different from the emotional view. The question is not, is Bitcoin dead? That is too simple. The question is not, is AI a bubble? That is also too simple. The better question is, where is liquidity being rewarded right now? Markets reward the asset that combines narrative, timing, flows, and positioning. For a long time, Bitcoin had that combination. Now, AI has taken a large part of the market's attention. Bitcoin needs to prove that it can win some of that attention back. That proof will not come from slogans. It will come from behavior. Are ETF outflows slowing? Are buyers defending important levels? Is liquidity improving? Are investors becoming less defensive? Is capital rotating away from crowded AI trades? These are the signals that matter. Until those signals improve, Bitcoin may remain stuck between long-term conviction and short-term hesitation. The real message of this market is not that Bitcoin has failed. The real message is that liquidity has choices. When liquidity is abundant, almost every strong story can work at the same time. But when liquidity becomes selective, the market starts choosing winners more carefully. Right now, Bitcoin is being compared against AI, and AI is winning the attention battle. For investors, that means patience matters more than emotion. A weak Bitcoin chart does not automatically mean the cycle is over, but a strong long-term thesis does not automatically mean price must recover immediately. Bitcoin needs confirmation. It needs flows to stabilize, buyers to return, and the market to believe that Bitcoin deserves the next dollar again. Until then, the calm view is simple. Bitcoin is not dead. AI is not invincible. But capital is rotating. And in this market, the asset that wins attention often wins liquidity first. That is why Bitcoin is stuck while AI steals the market's attention. The next big question is not whether Bitcoin still has believers. It is whether the broader market decides Bitcoin deserves fresh capital again.